Welcome everyone, and thank you for joining another Cut Through webinar. My name is Chris Gillings. I'm the founder of Cut Through and also an investor at 5V Capital. For those of you that don't know, Cut Through produces industry reports about the funding ecosystem in Australia. Our goal is to put the Australian startup ecosystem on a pedestal globally and make sure that everyone all around the world knows about all the great stuff that's happening here. We also put together webinars like this that aim to help founders and investors understand what's happening in the local and global ecosystem as it relates to startup funding. My day job is I'm an investor at 5V Capital. 5V is a multi-strategy fund. I specifically invest out of the VC strategy. We invest in B2B software companies at the Series A and B. We're halfway deployed on our current fund, so please do reach out if you're a startup looking for funding. You can email me direct at cgillings@5vcapital.com. We have an awesome session today. 3 investors from all corners of the globe. We've got Singapore covered, we've got the US covered, and we've got the UK covered. So it should be a great discussion about what they're seeing in their markets and also what appeals to them about the Aussie market, and more broadly, what can make an international startup stand out when seeking capital from them. So with that, I'd love to welcome our first speaker. But before we get to Rohit, I'd like to thank our sponsor, Vanta.
Vanta is a trust management platform that automates security and compliance so you can manage risk and build trust without the manual lift. Whether you're going after your first framework or scaling a complex program, Vanta replaces point-in-time checks with continuous automated monitoring. Alrighty, let's welcome Rohit.
All right, so welcome Rohit from Peak 15. Rohit, thanks for joining us. If you could just kick off by telling us a little bit about yourself and the fund that you work for.
Thank you, Chris, for having me here. I'm Rohit. I'm a partner at Peak 15. At Peak 15, we've been investing in India and Southeast Asia for the last 18 plus years. And over the past 2-3 years, we have expanded to invest and partner with founders globally, including in Australia and in the US. We're predominantly a early stage franchise, so we partner with founders through seed, Series A, Series B, typically writing $2-3 million to $15-20 million checks. We could expand and partner at late stages with founders. Through our 18 years or so, we have partnered with multiple companies that have gone on to be public. I think really what we have come to be best known for over the past few years is helping founders from APAC, from Australia, from India, build cross-border companies into the US. So we've partnered with multiple companies that we have had the chance of sort of building together and supporting from, either pre-launch stage or, often with $1-2 million in revenue to hundreds of millions in revenue. We have a big operating team in the US, which works with many of our companies. We are very actively investing in Australia. We have 10 investments in Australia, and looking forward to partnering with more over the next few years. So thank you, Chris, for giving me this opportunity.
No, absolutely. And perfect segue. I was going to say one of the main reasons we wanted to have you on today is because you're not just one of the most active international investors, you're one of the most active investors in Australia, full stop. So I'd love to understand, what is it about the Australian market? You've obviously got not a fully global mandate, but you've got a lot of markets to go hunting in. What is it about the Australian market that has led you to make those 10 investments?
I think, Chris, we have always embraced this maxima mindset, which means if we are investing in our own markets, we are looking for companies that are best not just in their local markets, but can be global maxima companies, or can be best companies in their categories. And many Australian companies, Canva, Atlassian, have proven that they could build global maxima companies from Australia. We think this is the number one draw for all, perhaps, and including us international investors looking to invest in Australia. We're looking for companies like Canva, Atlassian, Airwallex, which are global maxima companies. That is the very best companies in categories and products that they serve customers for.
I love that phrase, global maxima companies. Can you give a little bit more light about that? What defines a global maxima company?
I think when we were investing as venture investors in things like consumer internet and fintech, a lot of the companies were quite federated and innovation was quite federated, which means you could have a ride hailing company of America and a ride hailing company in Asia and a ride hailing company in Australia that could all be doing the same things and be very best in class for their markets. But when it comes to software, the needs of enterprises, the needs of developers all around the world are pretty much the same. I think the backend service that developers use in Asia is not very different from the ones that they use in America or that they use in Australia, and therefore the companies or products that emerge to be best in class, they resonate globally versus just locally. And our attempt is to find companies which could be that sort of globally best product, and that's what we kind of aim to identify with this global maximum mindset, which means when we look at a young company from Australia, we just don't see, or from Singapore or from India for that matter, we just don't want to see company which is best of the five startups in that space started from the region. We want to compare it against the five best companies in the world and hopefully assume that as these companies mature, they could actually be in the winner's circle.
No, makes a lot of sense. So you've made 10 investments down here. So you've obviously probably met hundreds or been exposed to hundreds of Australian founders. Can you highlight any unique attributes that you see down here in Australian founders or commonalities? Like what are there any? We often talk about Australian founders being frugal and doing less with more with less. But are there any attributes that sort of are a common thread amongst any of the founders that you've backed?
Actually, it's kind of I've always wondered how Atlassian and Canva came on to be so successful as they are, and so loved and respected around the world. And I asked a lot of founders as I met them, who were all building these PLG companies, and they said, "Look, we are in such an interesting time zone that we can't serve most people around the world, and therefore we've always embraced this mindset that." Our products should be usable when we are sleeping, and we make them incredibly easy and we made them incredibly user friendly. So I think design is definitely a very important differentiator that I see in a lot of Australian products. I think the Canva, Atlassian, Alumni that are building companies have embraced that mindset more than what we see founders around the world have typically. They build a lot of sort of these self-adoption or virality loops into the products, which drive a lot of organic growth, which then kind of feeds into frugality, CAC to LTV, etc., being a lot higher in Australian startups. So I think in that sense, the Australian startups, I feel, have a little bit of a chip on the shoulder and an edge when it comes to building beautiful products that can sell themselves and that kind of manifest the product-led growth. Uh, I think that's one big advantage. I think second, I feel maybe as an outsider, but I feel that you know Australian founders are culturally much closer to the US than say a lot of APAC countries or countries where the first language is really not English, and therefore it's much easier for them when it comes to selling to enterprises in the US or understanding the design or usability sensibility of their end users in US and in other markets around the world. So I think those two things definitely help in the early stages.
No, for sure. So you have a big team in the US and obviously a team based out of the home office. So many of our founders at 5V and obviously throughout the ecosystem really look at the US as a key market to go after, and more we're seeing the UK as well. Are you seeing that pattern within your portfolio as well, or are there founders that are actually going after Southeast Asia? Obviously, there's some time zone advantages of an Australian company going after Southeast Asia as a market, but there are obviously some challenges as well. You touched on language, maybe some cultural differences, but what are the trends that you're seeing in terms of where founders are looking to go as a next market the first, second, or third next market?
I think usually I see founders kind of expand along two vectors. One is the product-led growth founders who build a beautiful product. The product is kind of self-propagating, gaining adoption all around the world, and then they want to kind of step out of Australia to build a global hub where they could kind of bring together a diverse team, both culturally diverse, sort of time zone wise diverse, that can attend to their customers all around the world. Uh, I see some founders do consider Singapore as a stopover before going all the way to the US. And I think that strategy's worked out beautifully for companies like Superbase, etc., where in some case founders were already here, but they built it from Singapore and then gone to the US. We also see a bunch of founders land lighthouse accounts. Could be a big bank in Southeast Asia or a big retailer on an airlines, and then kind of expand within their sort of international operations. So you could start with a big lighthouse account in a big American bank in Australia and then use that to expand to the US with them, or you could land a big lighthouse account in a insurance company in Australia and then kind of use that as a launch pad to expand into five, six different Southeast Asian markets with them and so on. So we see those two approaches work really well for founders. But I would say pretty much for all founders, the end goal is to be relevant in the US, especially as they start sort of scaling revenues beyond 30, 40, $50 million. The depth of the US market is really helpful to keep the growth rates and the growth trajectory going.
Yeah, absolutely. Well, thank you so much for your time. My final question is, what are you most excited about at the moment in the world of technology? And you can't just say AI; it has to be more specific than that. But we'd love to get your what's keeping Rohit fired up at the moment.
Well, I think it is AI, like it cannot be anything but AI. I mean, what an incredible time to be living in and doing what we do, which is, be at the forefront uh, of this revolution and get a chance to partner with sort of people who are actually uh, building the picks and shovels for this revolution. I think the most interesting thing with AI that is happening and that we're seeing in our companies is time to value is shrinking
Mm.
very, very rapidly. I think the previous generation of software required a lot of adoption curve, and it required some degree of training, lots of integrations, and so on and so forth. I think a lot of the AI first softwares and interfaces are coming with prompt based interfaces. A lot of AI sort of products and interfaces are prompt based, and therefore, you could literally go from intent to execution without needing a lot of time to learn the software or the software to kind of capture your intent fully and so on and so forth. So the time to value is shrinking, and which is why you see, all the AI products get such rapid adoption, both in the consumer world, things like OpenAI and Claude and so on and so forth, and then also in the enterprise world, because the time to value your aha moment with AI products is so quick.
Yeah, absolutely. Well, thank you so much for joining us. We really appreciate it. It's super valuable for all the listeners. So I'll let you get back to your day and hope to catch up soon when you're next down in Sydney.
Thank you, Chris. Thank you for having me.
Thanks, Rohit.
Thank you.
Before we welcome Jeremy, I want to thank Vanta one more time. Security and compliance don't need to be manual or messy. Vanta helps you automate the process end to end, whether you're just getting started or scaling across multiple frameworks. With real-time monitoring and smart integrations, Vanta lets you build trust without slowing down. Thank you, Vanta, for your support, and let's welcome Jeremy.
All right, next up we have Jeremy calling in from the US. Welcome, Jeremy. Tell us a little bit about yourself and Bessemer.
Sure. Thanks for having me. I'm Jeremy Levine. I'm with Bessemer Venture Partners. I've been at Bessemer for about 25 years, actually. Maybe first, Bessemer is a global multi-stage venture capital fund. We do everything from $50,000 or $100,000 seed investments all the way up to multi-$100 million growth stage investments. Most of what we do is somewhere in between. A lot of Series A, Series B, Series C venture capital in a really wide range of areas, everything from software to defense tech to biotech and everything in between. There are about 20 partners like me who drive the investments across the firm. And we are in lots of different offices, West Coast of the US, East Coast of the US, Israel, India, London. But honestly, we don't care much about geography. We'll kind of go anywhere that an investment may take us if it's on our roadmap. Our current funds are about $4.5 billion. And we make all our investments out of the same pair of funds. We also have a separate business focused on India investing, and yet another one focused on software buyouts, all under the Bessemer Venture Partners umbrella. But what I do primarily, and what I want to talk about today, is venture capital. And then as for me, just briefly, like I studied computer science. I've been doing this at Bessemer for 25 years. I had a few very short careers elsewhere, and I'd say about half of my investments in the last 25 years are in consumer companies, businesses like Yelp and Pinterest and LinkedIn and StubHub. And about half my investments are in software companies, businesses like Shopify or MindBody, or based in Sydney, as an example, or split between Sydney and San Francisco, is a business called Relevance AI, which is a newer investment. And so that's sort of me and Bessemer in a nutshell.
Awesome. So just to put it in perspective for you, you've been at Bessemer basically longer than the Australian venture capital ecosystem has been going. So really appreciate your insights today. One thing I wanted to start with was, ever since I've started in venture, I've been an avid reader of the State of Cloud report that you guys put out and the insights that come from that. This year, you put out the State of AI report for the first time. Can you talk a little bit about what, that's a big move. It's a big piece of work to put together. What was it that made you guys realize or think that it really was time to, iterate on that report or bring out the new report as it relates to AI?
Now that you've made me feel old, I'll double down on my experience. So literally 10 years ago, as we just started ramping up, maybe close to 15 years ago, as we just started ramping up our investments in what we then referred to as SaaS, or software as a service. One of my partners, Byron Dieter in California, decided to sponsor what was originally a lunch for all of the SaaS CEOs he could find. And I think at the time there were like maybe 25, mostly in the Bay Area. And it just kind of grew from there very organically as the entire world moved to software as a service, which then effectively rebranded itself as cloud. And in the last 24 months, we kind of noted that there was no such thing really as a software company anymore that wasn't deeply embedding AI into its core offerings, its ancillary offerings, all of its offerings. And that honestly, a lot of the reasons for customers, particularly enterprise customers or even small business customers, to revisit their software purchases was because they wanted to take advantage of the new feature sets that were enabled in many of these software products because of AI. And so in many ways, all the same companies that used to comprise the quote unquote Cloud 100 are equally suited to represent the AI 100. And so I think of it more as a rebranding that reflects what's happening inside of these companies, as opposed to a shift in which companies we're looking at, because for the most part, the overlap is quite significant.
Yeah, absolutely. And we'll direct everyone on the line today to that report. It really is super interesting. Can you talk us through one or two of the most interesting findings from the report and the research that for you personally?
Yeah, fair question. I think for me, what's most interesting is that we were starting to think about, like, wow, is it the end of the cloud era? Has every nook and cranny of industry and consumer need been filled by some existing cloud software product, such that as prospective entrepreneurs or someone trying to think about building a new startup, is there any room left? Because every category, every company, every function has been so well covered, in most cases, not just by one company, but by many companies. And I think what the emergence of these large language models, or AI, has done is it's breathed a massive new life into all of cloud software. And as I sort of alluded to a moment ago, many customers are now thinking like, wow, does my existing solution, and I inevitably have an existing solution for almost everything, if not everything, do my existing solutions have all the latest and greatest features and functionality that are unlocked by AI? And if they don't, then I'm going to go back to market and think about like, well, what do I want to buy? And all of a sudden, these startup vendors are on almost equal footing with incumbent vendors, because the customers are looking for something new and something different. And in many instances, it's actually easier or more compelling to build a software product that embeds AI from day one than it is to try to inject AI into an existing software product. And so one might even argue that a true startup has an advantage. It's not just that they're suddenly on equal footing, but they may have an advantage over incumbents. But most of all, because it's causing customers to relook at, like, do I have the best functionality? Do I have the best capabilities in the software that I'm buying? It's a phenomenal door opening opportunity for new companies to kind of get on the map. And so we are re-examining many categories in which we may have already invested years ago, in addition to thinking about categories that we might have been a little bit trepidatious to enter within software, that now, because of AI, could become quite compelling. So to me, that's the giant takeaway. And then, of course, to all of our existing portfolio companies, the other takeaway is, what are you doing to embed these capabilities into your products? And if you don't have a plan, you better get one, because you're already behind.
Yeah, bunch of questions coming out of that one. I think the first one I have is, can you give an example of a sector or a pillar that maybe wasn't as appealing to Bessemer prior to this most recent wave, that maybe has been unlocked as an interesting area to look at with this new sort of AI capability? Sure.
I'll give you an example which will highlight one of the companies in which we invested that may make it a bit more real. And so there are lots of accounting firms in America and across the world. And at this point, all but the very smallest accounting firms, the many thousands of accounting firms, are all using some software to run their practice, classic practice management software. And there are a couple of incumbent vendors that have sold software, practice management software, to the accounting industry for decades, literally. The two largest or leaders in the US are Thomson Reuters and Wolters Kluwer. And these are like literally 30-plus-year-old software packages. And they're so deeply embedded, it's hard to displace them. And they also sell the software that facilitates the filling of tax forms by the accountant. So not only is it the practice management suite, it's also the day-to-day software that the accountants are using at many of these accounting firms to do their jobs. AI has suddenly caused a really interesting opportunity for change, because using AI to actually facilitate the filling out of a tax form is something that you couldn't fathom doing just a couple of years ago. Whereas now it can save an accountant an enormous amount of time from doing work that frankly was the least inspiring part of their job. Oftentimes it was like the sort of administrative or ingestion of data or this kind of stuff. And so we ended up investing in a company based in Charlotte, North Carolina, also not necessarily viewed as like a mecca for software startups, called iWin. And iWin is doing both. They are essentially building an alternative practice management suite for these accountants, which is something that they would have had a very hard time cracking into had they just been going up against these incumbents kind of head to head. And one of the door openers that they're using in many instances is a product that they're calling Taxa, which actually allows accountants to do their day job faster, better, easier by leveraging AI. The incumbents will ultimately try to come up with something, but it'll take them quite a while. Their software is, in some cases, based on AS400 technology stacks, so very difficult to update and modernize. And so that's an example. I don't think we would have gone after that category, which is so mature, had it not been for the injection of AI.
Yeah, absolutely. Second follow-up question to your previous response. So if you think about startups that are coming to you at, say, Series A or earlier, if you are meeting a startup at the moment at that stage that maybe is not AI at the core, or really thinking through AI, is it a non-starter Is that how you're thinking about opportunities, or is it more nuanced than that?
No, although it's funny because so yes, because we've been around for a while, we have lots of startups that are knocking on our door. But to be truthful, I would venture to guess that 80% of the investments we make, maybe even 90 or 95, but at least 80, come from startups on whose door we've knocked, not the other way around. And so part of our investment process is to develop a roadmap or an hypothesis as to what's changing in the world and where innovation has a chance to drive massive growth. And we're going out and trying to find startups that are consistent with those ideas. Now, we do also get many startups knocking on our door, but we tend to focus the vast majority of our time proactively pursuing the startups in the areas that we like or we think are compelling, as opposed to waiting for someone to come knock on our door. And so either way, that said, I would say that for both cases, we do have some roadmaps that aren't entirely AI centric, where we're trying to go find companies that are in those domains. I'm happy to talk about some of them. And then we are happy to look at and think about startups that may knock on our door. AI is convenient because it's such a catalyst and it's such a driver of change. It's not the only one. And so what we're looking for is some insight as like why some industry or some category is subject to change. And AI is an easy one because it's everywhere and it's causing lots of change, but there are others. And as long as there's a well-articulated catalyst for what that change is, and we can build conviction like, yes, that change is real, that will create a real opportunity for startups to attack incumbents or disrupt the way something works, we'll consider it for investment.
Yeah. And look, because it is a little bit of a narrative violation, I would love to hear about one of the thematics that you could share that are not grounded in AI.
Sure. So I'll give you one that's a wild departure. Although any company with technology can eventually find ways of injecting AI into what they do. But here's an example of a company that I'm very excited about. It's an investment we made last year that really had nothing to do with AI on the surface. The business is called Shop My. And so one of the areas that we've been watching for years now is this idea that historically advertising was based on traditional media like TV and radio, newspaper, and shifted online. But the fundamental idea was you would interrupt what a user is doing and inject an ad into some web page or news feed or what have you, some stream of content that the consumer was viewing. And then a number of years ago, a new market started to emerge around influencers. And these are people who amassed a social following. And through that social following, they essentially controlled a bunch of eyeballs. And influencers started to sell effectively their time or their endorsement, where you could pay an influencer to say something or do something to promote your product or your service. And in the world of influencer marketing, that was quite large. It's measured in the many billions of dollars. But despite our attempts to find a company or set of companies that were trying to systematize this world of influencer marketing and build a durable business on its back, we had been unable to find some. We found lots of agency-style professional services businesses, but no really strong software or marketplace business until ShopMy came along. And so ShopMy has built what I think of as by far the most compelling influencer marketplace, where they now have hundreds of brands, thousands of influencers, and their software is almost like a meeting point for the two. And you can, as a brand, systematically spend money by paying influencers to promote your products. And a lot of the way the marketplace is structured is that the payment happens for performance. And it's working, and it's taking off in a way that I haven't seen very many companies outside of AI grow. And so, as an example, last year, the business grew almost tenfold from the year before, and this year it's growing again at an incredibly rapid rate. And so on the surface of it, there's no AI there. Ultimately, they are in fact working to build AI into some of their products. And so, for example, one of the challenges if you're a brand in paying lots of influencers to promote your product is that you need to keep track of what exactly these influencers are saying and making sure that what they're saying to promote your brand is actually on brand. Well, it turns out AI is a really useful tool to do that. Instead of you having to manually watch all of these influencers, you can leverage AI tools to monitor them for you and flag for you if they might be doing something that's inconsistent with your brand. So even though the business itself is not an AI business at all, it too will ultimately leverage AI tooling.
Yeah, that's great. Final question. As you mentioned at the outset, Bessemer has a global mandate. You're looking all over the world for the best startups and best founders. Can you talk a little bit about what maybe an international of a startup outside of the US, what additional filters or signals that you have to see as an investment team in that team to give you conviction to do the extra work and I guess step a little bit more into the unknown in order to make an international investment?
Sure. And so I'll return to the fact that like we have, in addition to physical presence in the US, we have people who live in London, in Israel, and in India. But we invest all over the place. In fact, I personally have been responsible for investments in Korea. It's been a while now, but in Russia, before Russia changed, in Brazil, in Eastern Europe and in Western Europe. And that's just me. And there are lots of folks like me at Bessemer who are willing to go anywhere. And so the question is, what would motivate us? Well, first I'll start with what would hold us back. And so what holds us back from investing in a geography where we don't have anybody who lives is that it's much, much harder for us to be helpful in perhaps the most critical element of getting a startup really humming, and that is building and growing a team. Because if we don't live in, say, Australia, it's very hard for us to be helpful in introducing local talents to an entrepreneur. And that's arguably the most important thing we can do. And so typically speaking, when we're investing in a geography in which we are very clearly foreigners, we will look to see that there's at least some investor who's local, who can do some of the things that we would normally do if the company were in our backyard. Mm-hmm. And that's really the only or the most important negative, if you will. And so because we can't help there, and it's a little bit harder for us to get great references and assess the talent of the team, we have a slightly higher bar. That said, the way we approach investing outside of our core geographies or the geographies where we live is not to say, hey, let's go find interesting startups in Australia. No one at Bessemer ever thinks about that when they wake up in the morning. Mm-hmm. Instead, we think about the roadmaps that we're developing, and then we'll go try to find startups consistent with those roadmaps wherever they are. And so I'll give you an example of an investment we made in Australia just last year. We had decided that as the world of AI was beginning to mature a little bit, companies were trying to create and manage AI agents, which are essentially, pseudo-human beings, but in the form of AI that can go do a whole variety of white-collar tasks. But in order to build and execute and manage an agent, you kind of need a software platform. So we started doing research on every AI agent software platform we could find anywhere in the world. And we must have met with 15 or 20 companies. Some of them were just focused on sales agents. Some of them were focused on marketing agents. Some of them had customer service agents. Sorry about the sun that just disappeared from my office. But ultimately, see if I can fix
there
that.
There we go. You're back. You're back.
Thank you. Ish. Ultimately, the best company we found by far happened to be in Australia. And that was a business called Relevance. And we ended up investing in Relevance despite the fact that it was in Australia, not because it was in Australia. Because like I said, it's a little bit harder for us to help the company given the location of many of the team members. But we evaluated it on, in every sense, a global scale or with a global measuring stick. And our goal was, again, not to find the best company in Asia Pacific or the best company in the Southern Hemisphere. Our goal was to find the best company globally that was doing something consistent with this roadmap theme that we were excited about. And so I'd say to companies in any geography, when competing for venture capital dollars, if there isn't an extremely robust local venture community, you've got to think of yourself as competing globally, not locally. And if you have something compelling that works globally, you can attract capital from anywhere. And it happens to be that there's probably more capital available from American or US-based VCs who are willing to travel than other places, but not exclusively. And in fact, Relevance has other investors that are based in Singapore, the United States, India, and Australia, because we're not the only ones who realized that they were doing something special.
Awesome. Yeah, big fans of Jackie and the team. And yes, I can confirm they have some great investors down here as well. Jeremy, thank you so much for the time. This has been super, super insightful. I'll let you get back to your day and really appreciate it. Please give a shout if you're ever down in Sydney.
Will do. Thanks for having me. Take care.
Thanks, Jeremy.
Before Adam joins us, I want to give a final thank you to our sponsor, Vanta. If security and compliance feels like a time sink, I want you to go check out Vanta. It replaces ad hoc checks with always-on automation, helping you manage risk and prove trust fast. From your first audit to a full-blown compliance program, Vanta's platform grows with you. Alrighty, let's welcome our final speaker, Adam.
All right, welcome Adam from Octopus Ventures. Thanks for joining us, Adam. To kick things off, why don't you just tell us a little bit about yourself and Octopus?
Yeah, cheers, Chris. Pleasure to be here. Octopus, we're a London-based venture investor. We're one of the most active venture funds in the UK and Europe. We've got about £1.7 billion funds under management, investing from the very earliest stages, pre-seed, all the way through to growth and pre-IPO, with specialism in software, health, deep tech, consumer, and AI. And I have personally been in the business since 2015, been managing our B2B software and application AI fund since 2018. We have about 50 companies in that fund, predominantly investing Series A, Series B. And that's been the main vehicle which we have made a number of investments into Australia and NZ. I'm originally from Australia myself, background in both finance and go-to-market. Worked for a tech company here in London for a short while before it was acquired by Moody's Analytics, and did a little bit of time in banking at Royal Bank of Scotland as well. So I think we're probably one of the few quite active bridges between ANZ and UK Europe. It's an angle that we think is very interesting. A lot of sort of similarities and alignment between the two territories, and so real pleasure to be here.
Yeah, well, thank you so much for joining. And as you mentioned, you're one of the more active funds in Europe, but you're also one of the main reasons I wanted to have you join was because you are actually incredibly active down here. We did an investment together earlier in the year into Lyrebird Health. I know that you're sort of poking around and looking at other businesses at all times, and you've made a number of investments over the last couple of years. Apart from being Australian yourself, what is it about Australia that makes Octopus want to stretch over the pond and do the work to add that level of risk of it investing overseas?
Yeah, so I moved to the UK about 13 years ago, and at the time there was, as you know, like a very small ecosystem within tech and venture at the time down under, and I was keeping a very watchful eye over that sort of teens over that decade, and it's pretty clear, as you all know, like the explosion of that first generation of exceptional winners that emerged. And I think what we're now starting to see, both as far as those early companies' success stories and the first generation of founder success, that we're now starting to see like this second generation wave kick in, which I think is really amazing. Obviously, we all know the names and who've helped underpin that. You add to that, I think, the reality of the fact that these are very high quality founders that we're meeting in a much smaller pond, and it just makes it a lot less noisy than what you would see in some other ecosystems. So from that perspective, we feel, I suppose, the cohesion of the ecosystem out there, both from a capital providers, accelerators, network, events, etc. We just feel the quality of founder that we meet is really, really strong. You add to that the dynamic, as I noted earlier, around the attractiveness of the UK market and the parallels with Australia. I think often founders, probably more often than not, see the US as the first market they like to scale into from Australia, but at the same time, UK is definitely probably number two, if not at times number one, which means that, you know, for all the obvious legal similarity reasons, cultural alignment, etc., we can play a really active part in adding value tangibly by just offering the same, I suppose, level of thought and supportive activities that we offer our European portfolio. And I think that's really interesting, and it brings something additive to the local ecosystem that enables us to meet really, really, really great founders. And I suppose what else is there? I think at the same time, the UK is a market where it's 70 million people. You have Europe on your doorstep. And I think that the reality here is I think founders do get stuck domestically a lot longer than maybe what they do in Australia. And I think the reason for that is you can build a decent business here. You can get to 10 million pounds of ARR in several years here. And I think that's fine. But I think when it comes to like winning categories, which we've seen a number of Australian companies actually manage to do, which is truly phenomenal when you think about it. And I think that comes down to like the global from day one mentality. And I think that's tremendous. I think that's something which the founders themselves, when I meet them at seed stage, they've already got such a well thought through path to how they're going to get into Europe, how they're going to get into the US. And I think that just that natural domestic limitation just creates a global mindset from day one, which I think is obviously another reason why it seems to be outperforming from a, we've all seen the stats from a sort of unicorn creation per dollar of VC, etc.
No, that makes a ton of sense. So if you were to make the case to an Australian founder that was looking to their next market, and as you say, absolutely, the majority of them do typically say they want to move to the US, what would the case be in your mind to pick the UK? We've heard from Jeremy from the US and Rohit from Singapore, and each made their case in various ways. Like what, specifically for an Australian founder, what do you think, what makes it more practical or make more sense to head to the UK, or even though it is a smaller market than the US?
Yeah, look, more than 2/3 of our European portfolio is scaling into the US, so we're acutely aware of the size of that opportunity, but the challenges that come with it. And often the advice we give to those founders is to be highly targeted, state by state, and start to build your success incrementally in such a manner. If you think about it, the UK is a 70 million population state. It's one nation here. It doesn't have that level of complexity to it. It's incredibly similar to Australia in many different ways, both in terms of like cultural norms, as far as there are those subtle differences I think exists more heavily with the US versus Australia, which I think is less the case versus in UK and Oz. And so that's one point that I would make. Second point is that there is, London is the UK is the third biggest venture capital market globally, third biggest tech ecosystem behind the US and China. I think if you think about the availability of both capital, the availability of talent, the presence of big tech HQ here in London, the ecosystem that exists here in London, look, you can never be prescriptive with companies as to what makes the most sense. There's always going to be sectorial differences that exist. I think for fintech and health, it's an exceptional ecosystem to come to here. SaaS as well. Then, based on all of the above, like you'll need to make your own risk return assessment as to what makes the most sense. There's also personal factors that do matter. As far as where you may want to uproot and bring your family to, and yeah, I think there is also, a good level of like governmental alignment that seems to exist now between the UK and Oz. Like Australia was like one of the first free trade agreements the UK signed post. I don't want to use the B word, but so I think that from that perspective, there's good momentum that underpins trying to create a high level of connectivity between these two ecosystems. And we played a big part in that. We've made 7 Series A, Series B investments into that part of the globe out of our 150 company portfolio, and I think that we would welcome others in the future. And I think that bridge element is key for us.
No, completely right. And so many of our portfolio companies in 5V have launched into the UK and found great success, and for all those reasons you've described. Can you tell us a little bit about how you source companies down here? Obviously, it is a smaller market. You can be more targeted in your cold outreach, or I don't know if founders, you've built a brand here because you have made a number of investors. If founders are coming to you as their first international venture capital fund that has that critical mass of capital that can really back like a later stage Series A or B. Can you talk a little bit about like how you guys managed to get into really great deals down here? And I guess putting the founder's hat on, how do you get noticed by a firm like Octopus, and how do you get on their map?
Yeah, look, I think like 2015 to 2020, we would just have founders coming to us because they were interested in coming to the UK, and we weren't doing any deliberate strategy behind that, and started to notice that actually these are some really impressive businesses producing like really good metrics despite a very scarcely available pool of capital locally. And I'd say since 2020, we've been a little bit more deliberate in trying to build brand networks, etc., in that part of the globe. And yeah, I think for us, I'd say route one, I think, is having more of a partner-driven approach, working alongside funds like yourself, the others who probably play a little bit more at the B2 Series A stage, I would say, whilst us, we're happy to go much larger in terms of check size. And so from that perspective, trying to position ourselves as a value additive supportive partner at any point where there is the UK and Europe as part of the strategic short-term priority. So I think for me, that's the one thing I want founders to really know from a Octopus brand awareness perspective. If scaling into this territory at that phase where you have proven product market fit in Australia, and actually, to be honest, like quite selfishly, you've also already done a decent amount of homework at the very least in terms of proving that there is international product market fit. Homework could mean customers, homework could mean proof of concepts, it could mean building networks who've given you a high level of insight and confidence. And from those perspectives, like, we're open to having those conversations with founders. And yeah, how else? I mean, yeah, I do come down from time to time. We've obviously met face to face a number of times. Head to some of the big ecosystem events. And we also do, I think the Octopus brand is one where it's multifaceted. The Octopus Ventures business, we are our own business with our own CEO, own investment committee. We don't answer to a sort of bigger part of the group, but we are part of a broader group. There is actually an Octopus clean energy investment team in Melbourne and Sydney. There's about 50 of them now. And we also have Octopus Energy in our group, which is the UK's largest energy business now with about 10 million customers. Origin Energy are a large customer in theirs. And so I suppose the point I'm making is there's like good brand awareness of Octopus as well, which I think helps. And so, but we will continue to try and position ourselves as something that could be additive to the ecosystem and hopefully helpful.
No, for sure. So final question. Look, we talk about all the good things about Australian startups. You mentioned Global from Day One as one of them. If you were to give any advice, and broadly speaking, not specific to any particular experiences that you've had, but any advice to founders, companies that want, if they are trying to position themselves as appealing to a fund like yourselves out of the UK, are there a couple of items that you look to straight away that maybe you look to in all your companies, or maybe when they are an overseas company that is looking to get capital from you? Just one or two factors that you...
Yeah, I think for us, look, I think I'll be quite candid. I don't think we're alone in the pool of international investors who often want to see proof and traction that there is demand for your solution outside of the Australian shores.
Yeah,
we're very happy to have conversations with founders who seem to be onto something special domestically. But as far as like truly can we invest into those situations, I think we want to see a good amount of homework, as I noted earlier, a good amount of research that your product has high viability in ideally the UK, but at the very least, like across our continent over here and perhaps in the US also. So, and I think the reason for that is like we are quite an active investor. We like to try and be helpful and valuable and open up our broad network, etc. And I think if we're not able to add that sort of leverage in terms of putting the product in front of people in our network who could make here and now decisions with respect to, potentially utilizing it, I think what's the point as far as us actually working to with one another? We want our money to be smart and valuable. It's a competitive world, the world of venture capital. I think that's the product we like to bring to the table. And I think secondly, in addition to like the homework and the thesis, I think also we've got enough data points now to realize that the building of the company in an international, it depends what type of product you sell, like enterprise sales all the way through to like low touch product growth, SME, SaaS, etc. The level of founder commitment and the level of seriousness with respect to the fact that often when you're bringing your company, which maybe everyone knows down in Australia, to this part of the world, and it is a completely different ecosystem. You don't have that level of brand awareness. You're literally building like a version 2.0 of your company, which can be quite like a rude awakening for some founders to realize that like they've hustled their way into building something special down under, but actually to set it up from bottom up in the UK, it requires all of the same things to be basically done again. in a way that it's not just a regional sales office. It's like effectively like another seed stage startup. And so therefore, to maximize the chances of success of that, I think from our perspective, we do bias towards ones where it's been given the significant level of founder seriousness. That doesn't have to mean like uprooting your life and moving here, but it probably does mean spending a significant chunk here, or at the very least, someone very, very senior in your team relocating. As I said, we've seen all the models, like hiring someone locally, country manager with the black book. That's very helpful, but at the same time, left to their own devices without, I suppose, that huge level of connectivity to HQ and understanding of product, problem, etc. I think we definitely look very fondly on like founder seriousness and relocation and things like that.
Yeah. All very good advice that I agree with in 100%. So thank you so much, Adam. We're going to actually wrap up the whole webinar here. So thank you, Adam. Thank you, Jeremy. Thank you, Rohit. Thank you, Vanta, for helping pay for all of this. Really appreciate everyone's time. Thanks for joining us. As I said at the outset, you can catch me at cgillings at 5V Capital. But otherwise, I'll let you all get back to your day, and we'll see you soon. Thanks, Adam.
Thanks, Chris. Cheers.